All right, welcome. If you're looking to cut through all the noise and get straight to what really matters in AMD's latest numbers, you are definitely in the right place. Today we're doing a deep dive into AMD's fiscal Q2 2025 earnings report, just dropped on August 5th. Our mission really is simple. Slice through the data we're seeing from places like Investopedia, TradingView, on the economy, pull out the key nuggets, and connect the dots for you so you understand what actually happened with AMD this quarter and maybe what it signals for the wider tech world. Expect some surprises, clear takeaways, hopefully a few aha moments.
Exactly. And, this isn't just about crunching the numbers themselves. It's really about getting a feel for the powerful forces at play behind them, especially in a sector as dynamic as semiconductors. These reports, they have layers, right? And we want to help you peel those back and see the bigger picture.
Okay, so let's start at the top. What did the initial numbers, the headlines, tell us? Well, AMD's revenue definitely caught the eye. Came in at $7.69 billion. That's a pretty hefty 32% jump year over year. And it comfortably beat the $7.41 billion consensus analysts were looking for. So, a strong top line beat right away. But then you look at the adjusted EPS, the earnings per share, that landed at $0.48. Now, that was basically in line with AMD's own predictions, what they were forecasting internally, but it did slightly miss the broader street consensus, which was looking for $0.49. So kind of mixed signals there at first glance, suggest maybe some differing views out there.
And what's immediately striking, really fascinating, is how that strong revenue number clashes with one pretty stark detail, the gross margin. It actually fell quite sharply, down to 40% from 49% a year ago. That's a big drop. And it points directly to a huge impact. We're talking about $800 million from these U.S. export control charges, basically related to AI GPUs that were meant for China. Just to be clear, this wasn't like a penalty or a fine. It was essentially revenue they just couldn't book this quarter because of the restrictions. Take that away, and their gross margin would have been closer to, say, 54%, which, wow, that really shows you the core tension in this whole report, doesn't it?
Wow. Okay. So that $800 million figure really does cast a shadow. But, even with that, there was clearly a lot that went right for AMD this quarter. What were the big wins?
Oh, absolutely. Yeah, if you sort of look past that one major item, AMD put up record revenue. And it was driven by just incredible product strength. We're talking, surging demand for their PC chips like Ryzen, their EPYC server CPUs, plus really strong GPU demand as well. Pretty much all their main segments hit new highs, which honestly says a lot about their execution.
And digging into those segments a bit, that client segment, the PC side, that was a huge bright spot, $2.5 billion. That's up an incredible 67% from last year. And gaming wasn't far behind either, right? $1.1 billion, up 73%. That really highlights how competitive AMD is being against, Intel and NVIDIA in those key areas.
Exactly. And what's quite fascinating here is just how robust that core product demand is, even with all the broader economic stuff going on. And this momentum, it doesn't look like it's just a Q2 thing. AMD's guidance for Q3 revenue, it's pretty bullish, $8.7 billion. It's quite a bit higher than the $8.32 billion consensus. So it clearly signals they see continued strength, particularly in AI and data center sales, despite some of those headwinds we just mentioned.
Okay, but, no earnings report is ever perfect. Let's dig into the challenges, the areas where maybe things weren't quite so rosy. That gross margin compression we talked about, that's a big one, isn't it? Dropping from 49% down to 40%. That's not just a number on a page. It means for every dollar they sell, they're keeping significantly less profit. And like you said, it's crucial to stress this was mostly because of those export control charges. It's just a stark reminder of, geopolitical risk in today's world.
Right. It really puts a spotlight on how global supply chains are affected by policy.
And then there's that adjusted EPS again,
Yeah.
$0.48. Okay, it matched their internal forecast, sure. But the fact it was just shy of the $1.49 street consensus, that seemed to maybe dent investor confidence a little.
It's a small miss, yeah, but in this kind of market, which is super sensitive, even tiny deviations from expectations can really impact how people see the report. And if we try to connect this to the bigger picture, it kind of suggests that even in these high-growth markets, things aren't always straightforward. Take the data center segment, for example. Yes, it grew 14% to $3.2 billion, which sounds great, but actually that was slightly below what a lot of analysts were hoping for. And you can probably chalk that up to, increased competition and maybe some strategic decisions by AMD about where to allocate their chips. So even in a booming area like data centers, growth isn't always, a perfectly straight line up. It can be lumpy.
Right. Now let's get to the really tricky stuff. The aspects that are maybe largely outside AMD's direct control. The biggest one seems to be this export control hit, as people are calling it. We're talking, again, about roughly $800 million in shipments to China that got deferred, basically forced into this quarter's accounting in a negative way. And just to reiterate, because it's important, this wasn't a problem with their products. It wasn't a fine. It was revenue from chips they made, but couldn't actually ship and get paid for in Q2 because of U.S. policy. It's like, having a big order ready, packed up, the delivery truck gets stopped at the border. You just can't book that sale for the period. It's entirely policy-driven, this headwind. And yeah, it feels like something that could potentially stick around.
It definitely could. It introduces a level of uncertainty.
And the market reaction was, well, it was pretty telling. Despite the strong revenue beat, despite the bullish Q3 guidance, AMD shares actually fell about 4% in after-hours trading. Why? Well, AMD stock has a pretty high valuation right now, trading near 50 times its projected earnings for next year. To put that in perspective, investors are betting $50 now for every dollar of profit they expect next year. That implies they expect huge, flawless growth. And that kind of valuation, it just leaves very, very little room for error. Makes the stock super sensitive to any kind of hiccup, whether it's macro news or something specific like this. Good or bad news can cause big swings.
And this really brings up a critical point, doesn't it, about how these external policies are increasingly shaping what happens inside a company. These U.S. restrictions on AI chip exports to China, for instance, they could distort financial reporting. They could mess with supply stability more and more. It makes forecasting incredibly difficult for global companies like AMD that rely on, well, predictable trade flows. It's a really clear illustration of how the predictability of global trade is almost as vital now as product innovation for a tech company's bottom line. And the market's reaction suggests that maybe investors are pricing in that unforeseen policy risk even more heavily than they're rewarding stellar product demand right now.
Okay, so pulling all this together, what does it actually mean for you, listening, trying to understand the bigger tech story here? Well, the core paradox this quarter seems pretty clear. AMD delivered a really standout revenue number, beat expectations there, gave very bullish guidance for Q3, showcasing super strong demand for their products. But all that enthusiasm, it was definitely dampened by that big hit to margins from the export controls and that tiny miss on EPS. It's almost like reading a report about two different companies at the same time.
Exactly. It's that tension. And looking ahead, the sources we looked at suggest there are a few key things to watch to see how this plays out. First, the pace of AI GPU restocking. How quickly can they actually ship those high-value chips now? Second, keep a close eye on margin recovery. Will it bounce back once those China-bound chips either get shipped somewhere else or the situation changes? That's a big question. And finally, just watch how AMD's competitors react, especially in that really hot data center space. It really forces you to think critically about this complex dance between company performance, what the market expects, and these powerful global geopolitical forces.
Well, that wraps up our deep dive into AMD's Q2 2025 earnings. It's definitely a powerful reminder, isn't it, of just how complex modern business reports can be and why it's so important to look beyond just the headlines to really grasp the full picture. So as you continue watching the tech landscape, maybe chew on this thought. How much room for error do these high-flying, high-valuation tech stocks really have, especially when they face external shocks and geopolitical curveballs? Even when their core products are performing as strongly as AMD's clearly are right now, keep asking those kinds of questions and keep digging deeper into how these big global events shape the technology we rely on.